and welcome to FountainFX on Thursday the 26th of June 2014. Almost didn't get the date right then. And we can see here that price has been in a downtrend from up at the 139.30 area all the way down to the 135.20. So a nice 400 point move there. Since then, price has been pushing back. Now this could potentially just be a simple pullback to then continue on down and break through to lower lows. However, it could be that this is now the start of an uptrend, and so we just need to be able to analyze it and see exactly what price is doing and what we think the highest probability trade will be. So at the moment, price is pushing up. We have a trend line running along the lows, and we can see we've got confirmation that obviously this downtrend has been broken, so we can now take that trend line off. We can remove that, but we have an area of resistance just above this area of where price is, which is at the 136.70, and we can see that here price has potentially broken this trend line. It hasn't on the daily chart because we've got a close that's occurring above the actual trend line, but price has been all the way back down to this previous area of support at the 135.80, 135.70, 135.80 level here. The fact that it hasn't broken through that shows that it's not turning, it's not giving us a downtrend or any signs of weakness. So it could potentially just be a pullback for continuation in this short-term uptrend. Now, as I said the other day, I said, look, if we look at this from this viewpoint, we could see a shoulder forming, and this could be the head. So we may find that we then get another shoulder formation occur before we see the neckline here at the 136.70 get broken, and we look to see price continue to rally. Okay, so that's one observation. On the other hand, we could be looking at price pushing just that little bit higher into this area of resistance before it turns and continues to push down, because this is a significant area of resistance, as we had a low here at the 135.90 and price pushed up into this area of resistance only to turn and fall to a lower low. Yes, we did have this wick, etc., but this was caused as a result of volatility in terms of news and stuff like that happened. But in terms of consistency in the market and order flow, the previous low was here. By pulling back up into this area of resistance, we then saw a new low form. So there is the potential that at this level we could see price turn and fall down, and that was the plan that we were looking at yesterday. And unfortunately, price, as you can see, it only got there, but a few pips short, around about 10 pips short of our entry at the 136.60, and so it didn't happen. It wasn't triggered. Had it been triggered, it would have been a very nice trade, because it went from the 136.50 all the way down to the 135.80. So a nice 70 point trade off this high. However, we're now starting to see, as you can see from this wick, we're starting to see some buying pressure come in. So if we now go down to a lower time frame, and what we can see on this lower time frame is that fact is that on the 4 hour, even though we were using this trend line on all these lows, these touches to the trend line, which was quite a few, finally on this it has actually broken in terms of the close of the candlestick, and it looks like price has now turned and is underneath this trend line. So we have a couple of options that we can do. We can actually plot another trend line on here, and we can plot the trend line from the highs to the highs to the highs, and we could say when that trend line gets, this trend line here gets broken, then we get confirmation that the uptrend is continuing. We may want to make it a bit more acute just to give us more of an indication, so we can run it to the bodies of the candlesticks. We could do it like that, and see if therefore if this trend line gets broken. So we could see a very small pullback here and then a continuation of pressure going up, in which case we can then see that yes, we're back into an uptrend. So it may be the opportunity to buy somewhere around about here at the 136.15, 136.20, and take price back up to the 136.60 area. But we need to wait for price to show us that it wants to do that and give us confirmation. The alternative is whether or not price comes back down to this area of support. This might give us a better entry to go long, and therefore we take a buy order down here, especially because we've actually seen this very strong buying pressure with this very long wick here. So I mean, we are talking, this wick is like 20 pips long, so it's a significant amount of buying pressure there on the 4-hour chart, 4-hour candlestick. So that might give us an opportunity here, looking to buy to continue with that. On the other hand, we might see that there is certainly if there is a break of this trend line, then we may therefore be seeing a continuation in the downtrend, as we mentioned earlier on. That's really it from FountainFX, but from a high probability trade, if we look to see if this trend line, this downtrend line, gets broken, then it would be confirmation for us to take a nice long. What would be good is if actually we see price come down to this support again, test the support line yet again, and then bounce from it, break the trend line, give us confirmation for a long entry. That would be a higher probability trade there. The alternative is that should price break below this area of support, then we're probably saying that price wants, we've got confirmation that from this level price does want to push lower, potentially all the way down to this support down here at the 135.20. So we need to be aware of price action and the different levels of support and resistance, and also trend lines. If we can gain that, then that will help give us some clarity, give us some good entries and good exits, and be able to minimize our risk and maximize our return. That's really it from today from FountainFX. We'll catch you tomorrow, and happy trading.